of the government. Any questions in that? If not, let's move on to the next topic, which is about government income. So when we talk about government, right, I think, I don't know whether it's last week or the previous week, we discussed there are mainly two policies to ensure the economic stability in a country. So what are the two main policies? Fiscal policy and the monetary policy, right? So when it comes to government, what is the policy which is in consideration? Government is responsible for what policy? Fiscal. Government is responsible to the fiscal policy, right? Sorry? Fiscal policy, government is responsible. Who is responsible for monetary policy? Central bank, right? Even the governor clearly states he is responsible only for monetary policy. So he will look after the monetary policy and those aspects. He is not responsible for this, right? Okay, in a independent economy where the central bank is independent from the government, that's a true situation. Central bank do not need to intervene for the fiscal policy. Government should take the total responsibility and the authority with regards to fiscal policy, right? So when it comes to fiscal policy, there are two main components in fiscal policy. What are those two components? In the fiscal policy, what are the two things which we will look at? What is fiscal policy about? What does fiscal policy talk about? Budget. Okay. What is included in budget? Sorry? Income and expenditure of who? Government. So fiscal policy entirely focus on how the government plans to generate their income and how the government plans to spend their money. So basically government income and government expenditure is what is looked at in fiscal policy, right? So here comes government income and then government expenditure. So fiscal policy talks about government income and government expenditure, right? So let's take a look at government income first. Government revenue refers to the total income collected or generated by the government through its tax and non-tax based revenue sources, right? So how do the government usually generate their income? Through taxes, right? So mainly we collect their income through taxes, but there is also non-tax based revenue for the government as well, right? So highest out of all the government revenue sources, the highest contribution towards public income is from the tax-based sources. It could be direct or indirect. Can you see the latter part? The government revenue basically get divided to tax income and non-tax income. Tax income could be through direct taxes or indirect taxes. I'm sure you all being, chartered students, you all know so much about tax more than me. So I don't think I have to explain this much, right? So under direct tax, there are two types, income tax and debit tax. Under indirect tax, it can be tax on goods and services or taxes on international trade. When you're doing imports and exports, the taxes which are being charged there. So under taxes on domestic goods and services, you have VAT, value-added tax. Then production tax, it's charged from the firms at the point of production. Then licensing tax. Under tax on international trade, there is import tax, ports and aviation tax. And I think now these are the basic classification, right? But in Sri Lanka, you have various taxes in different terminologies and everything. So that's a separate lesson which you have to study as a subject called taxation, right? Uh, and government also can earn income through non-tax income sources, such as current income and capital income. So that can be generated by the investments the government has made. So I don't know whether Sri Lanka really earns that, but if you are a proper functioning government, government also make investments in private sector. It can be in firms, in business units, and earn an income in terms of dividends or loan interest payments, or else they can go and invest on, they can lend to other countries, other, banking sector and elsewhere and earn an interest income. So they can, or they can invest on stock market and they can earn income, right? So that is categorized under that, right? Do you want an explanation on these things? I didn't include because I thought you all are pros in terms of taxes, taxation and everything. You all have covered those, right, under accounting? Or do you have a subject called taxation? Covered or yet to come? In chartered, haven't you had a subject called taxation? Yeah, right. We all are like the ones who really study taxation. Wait, have you covered that subject? Okay. So do you need an explanation on these things, a note or something? Those who need a note, please raise your hand. Okay, so you know the terminologies, what it means and everything, right? Examples, all of that. Yes. Okay. Then we'll move on to, if anybody needs a note, please let me know. What is direct tax? What is indirect tax? No need, no, you all know, right? Okay, then let's move on to government expenditure, right? So that is the other part of the fiscal policy, right? Government expenditure refers to total expenditure incurred by the government through its current capital and net lending expenditure sources, right? So this I'll explain a little, assuming that you don't have much of an idea. Do you know this structure? Yes or no? Okay. So public or government expenditure, there are basically three types: current expenditure, capital expenditure, and net lending, right? So first, let's take a look at what is meant by current expenditure, okay? Current expenditure refers to all current nature expenses incurred in order to maintain public service. Now, government is also an institute or an entity. They have to maintain their day-to-day activities, right? So for which they have to incur certain expenses. It can be on goods and services or any other thing. To maintain their public services, they have certain expenses. So such expenses are called current expenses, right? Usually, current expenditure incurred during a short time period, what we consider as short term, is 1 year. So any expenditure government incurs just for 1 year or less than 1 year time period are called current expenditure. In other words, this is the total annual recurrent running cost of the public sector and social economic activities. So it's basically to run the day-to-day activities of the government. What is the expenses they incur? Recurrent running costs. Okay? So basically, there are three types of current expenditure expenses. First, goods and services. So that means the costs incurred on goods and services which are required in order to maintain public services. So if the government purchase any, let's say, material, okay, now for example, stationery or any other material which they require to run their day-to-day activities, that comes under that category. And the salaries and wages paid to government employees comes under that goods and services category because employees are providing a service. So whatever the salaries and wages they pay to them to run the government, authorities, agencies, departments, all of that, that comes under that. And utility payments. The payments government does for electricity, water, fuel, and things like that comes under goods and services category, right? Then on a current nature, they also have interest expenditure. Okay? Interest expenditure incurred by the government during the current financial year on loans obtained by the government for the purpose of financing previous budget deficit and any other unplanned expenditure. So if you obtain a loan, if the government obtain a loan just to run the current financial year for 1 year time period, let's say you have a budget deficit this year. To finance the budget deficit, you obtain a short-term loan for less than 1 year. Whatever the interest you pay for that will come under that current interest payments under current expenditure category. So you need to clearly know what comes under what. Because in the exam, you might be given certain data, information, and asked to calculate, government budget surplus or deficit. So you have to put the correct item under the correct category. Okay. So debt servicing examples are like debt servicing payment, interest on installment, whichever you incur for less than 1 year time. Okay. Then current transfers. Okay. So current transfers are provided by the government in order to support and provide incentives to households, firms, and state enterprises. So if the government, now also one of the role of the government is to help the less fortunate people, right? So on an annual basis, they provide certain incentives to less fortunate parties, right? For example, some of the payments, right? So whichever occurred during 1 year's time period. So it's a current transfer. It's not a transaction. So you identify like less income earning families and you provide a transfer. So there's nothing coming back as a return. It's a pure transfer from the government side. So which happened during 1 year's time. So like things like some of the payments, whatever the pension payments due for that current financial year, any fertilizer subsidies you provide. So all of that comes under current transfers, right? So these are the elements which are under current expenditure. Is that clear? Any questions? Okay. Then let's take a look at what is meant by capital expenditure. Expenditure incurred by the government, investment activities where such expenditure is incurred and shall take effect, as well as create benefits beyond a period of 1 year. Whatever the expenditure you incur on investment activities, but if that investment gives you benefits for more than 1 year, then that expenditure, you call it a capital expenditure, right? So capital expenditure is usually, it's supposed to result in an expansion of economy's production capacity. So if the government incur a capital expenditure, it's with the purpose of investments. Ideally, it should result in expansion of production activities in an economy. Right? It should directly contribute to the economic productivity. In other words, it should ideally increase in the gross domestic production of the country as a result, the income generation of the country. Right? So capital expenditure is supposed to be targeting that. So there are basically two types of capital expenditure. One is acquisition of real assets. Okay? So that means the cost incurred by the government in order to purchase or build long-term fixed capital assets. These acquisitions are made by the central government and its enterprises, right? So if the government invests on building a long-term fixed capital asset, or it can be acquisition. So already existing business or some property, the government buys from the private sector, they buy, right? So that also will be included under that, right? And usually that acquisition should be made by the central government or any other enterprise attached to central government. That's why sometimes government buy through different authorities, different state ministries. So either way, if you acquire an asset or if you build an asset for long-term purpose, that comes under that, right? So main expenditure components include cost incurred on land and building, buying land or buying building or constructing a building, machinery and equipment, irrigation projects, highway systems, and building schools, hospitals, and things like that. All of it comes under that category. Then the other type of capital expenditure is called capital transfers, right? Transfer funds from the central government to its different departments and authorities, as well as provincial and local government bodies, in order to acquire and maintain capital assets, right? So if the government, the central government, transfer money to one of the government agency, asking them to purchase a particular asset, right? Or, maintain some asset. That is called as a capital transfer. So they are not directly involved in buying any asset. They transfer money to one of their agency to buy an asset. So finally it will be their ownership, right? But they are not directly buying. So that is called capital transfers. Now, for example, recently there was a huge issue where the government wants to buy some of the land belongs to University of Colombo, right? So that's now even though all the universities comes under University Grants Commission, right? So University Grants Commission is a separate entity which is coming under the Higher Education Ministry, but University Grants Commission is a separate entity, independent entity. And under that, universities are independent, right? So a government can't directly come and buy any property belonging to the university. So, but they can make, they can pressurize the parties who are in power so that the university, so if they want to buy a property for the university or buy the property from the university, that has to happen through an indirect channel, right? Even though the universities are ultimately, it's a government body, but it's not directly under the government's control. So such scenarios, they do capital transfers. They transfer money to one of the ministry who can influence, and then it goes as a transfer. When we are buying or acquiring any assets through a body attached to the government. So, supporting the capital expenditure of the government authority function with a non-profit generating structure and motive. So, usually government does that if they have any entities which are non-profit oriented entities. For example, universities, government hospitals, National Youth Council. So, they are attached to the government but separate entities, independent entities. And they are non-profit oriented. They don't earn any profits. They don't have their own funding scheme. So if they want to make an investment, if they want to buy an asset, that should come through the government under different budgets. It has to come as budget allocations. So those are called capital transfers. Right? And also sometimes the government does capital transfer to support loss-making government authorities such as CTB, CEB, Railway Department, and there's so many in this list at the moment. So if there is any capital expenditure they have to incur, they are loss making, they don't have their own funds, then the government has to do a capital transfer to them so that they can do their investment, right? So all of that comes under capital transfers. Is that clear? Any questions on that? And the other aspect, so current expenditure, capital expenditure, the other type of government expenditure is net lending. Okay. So quickly read this through. Read it yourself. So net lending is also part of government expenditure. That is where the government provides loans to its enterprises or departments or authorities. They provide loans. Government provides loans for different purposes to the authorities, departments, and other agencies which are coming under the government. So the word net lending comes there. The basically loans provided by the government. And there's a certain portion of this loan provided which is repaid during a particular financial year. So loans which are being minus loans which are being repaid. So this whole thing is called net lending, right? Loans provided by the government to its authorities, departments, all of that, minus the loan which has been repaid by them back. So net lending comprises four main categories of government loans. So government provide loans for different purposes. One is they provide lendings for a specific purpose. Let's say if one of the department or authority is involved in a particular project, right? So to run that project for that particular purpose, they might be providing a loan, right? Or else restructuring expenditure. From time to time, you might have heard the government is deciding to restructure certain entities, right? So when they are planning a restructuring activity to run the restructuring expenses, they provide a loan for that situation. Or so repayment of loans come here. Repayment of loans is this part, right? And there's something called an advances account. That means the government provides certain advances, like even like in a normal company, also you have something called advances. So it's a temporary borrowing. You provide an advance for some purpose and they pay it back. So that get netted off. So temporary borrowing by the government institution, like an advance, you give an advance, right? So all of that will be included on the net levy. Is that clear? Any questions? Those are at the back. Clear? So that is the structure of the government expenditure. Is that clear? Now let's move on to discuss about the government budget. Okay. Yeah. So what is the government budget? Now budget is in high discussion. So what do you know about budget? Now you all talk about budget. You make comments, you support the government, you make so many comments, right? So I'm sure that you all know about budget a lot. So what does that mean? What is meant by budget? Government budget. Okay, calculating. Okay. Take data. What is meant by government budget?
The revenue and the way the government to do the expenses according to the industries and
Okay.
the allocation part.
Okay. Any other ideas? Usually, budget is prepared for how long? Yeah. So usually they revise the budget every year, right? So in simple terms, the government budget is a financial plan for the government. Okay. It will include, as I earlier discussed, what are the sources they are planning to earn their revenue from and how are they planning to spend their money. Right? So it includes government income as well as government expenditure, right? So usually who prepare the government budget? Finance minister doesn't prepare, but he's responsible, right? So the finance minister of the country or other finance ministry are the ones who prepare. That person only reads it out, right? So he's supposed to present it to the parliament and get approval from the parliament or legislation that you get the approval, right? The budget will contain estimated government expenditure for the future year and the proposed ways and means of generating government income and also how they are going to finance if there is any budget deficit, right? So basically the government is supposed to plan the expenses. What are the expenditure for the next year? Then they have to think of ways in which how they generate income to manage those expenses. And if there's a deficit, how they are going to manage it as well. They have to plan. Okay. So basically, the government budget has two accounts called current account and capital account. So whatever we discussed earlier under current expenses, capital expenses will come under these two categories when you're preparing the government budget, right? Okay, so contents of the government budget statement. Okay, first of all, there will be the current account. So current account will contain all the government income and government current expenditure, right? Total income the government generates, right? And the current expenditure the government incur. So you remember the current expenditure, right? What are elements which were under current expenses earlier? There were three categories. Remember? First one, goods and services. Second, interest payments. Third, current transfers, right? Okay, good. So current Current account will include mainly all the government income, right? Total income of the government minus the current expenditure. So all those expenditure items you mentioned, expenses on goods and services, interest payments, current transfers. So all those current expenses will be deducted from this. Okay, so that is called the current account. Okay. So the difference between total government income and current expenditure is known as the current account balance, which results in creating government savings or negative savings depending on whether the current account balance is a surplus or a deficit, right? So the value here can be a positive one or a negative one. It can lead to a government saving or a negative saving, right? Then comes the capital account. Capital account contains the investment and development expenditure the government plans to incur and allocate funds for the financial year under consideration. So all the items which we discussed on the capital expenditure will come here. What are those items? Acquisition of real assets. Huh? Capital transfer. So okay, I'm glad the one who was sleeping remembers it, at least from his, dreams. අනිත් අය ඇහැ අරගෙන ඉඳලා මතක නෑ. මෙයා වහගෙන ඉඳලා slide එක මතකයි. It's good. Okay, so that will come under capital account. Okay. So account will include all capital nature expenses relevant to the government budget. So capital account will come afterwards. Basically, capital account will only include all capital expenses, right? Because total income is considered here. Minus current expenses will give you the current account balance. Then capital account will only have capital expenses. You deduct that, and then you get the overall budget balance. Is that clear? So that is what is shown here. Can you take a look at this? Current account includes total government income, which includes tax revenue, which we discussed earlier, then all the non-tax revenue components. Total of it, from that you deduct the total current expenditure, then you derive at the current account balance. And that can be a positive figure or a negative figure. If it's a positive figure, it's called a government saving. If it's a negative figure, it's a negative saving. Then from that, you deduct. So capital account only includes capital expenditure, net lending part, right? So that total value you deduct, then you get the overall budget balance. That can be a plus figure or a negative figure. Depending on that, we know whether we have a budget deficit or a budget surplus based on this figure. Is that clear? Do you want to make any notes here? If so, I'll give you 2 minutes. Okay. Then let's look at what is this overall budget balance, whatever you generated at the end of that budget calculation, right? So this is the difference between total government income and total government expenditure. The overall budget balance reflects future aggregate fiscal performance of the government during the next financial year. So it kind of demonstrates in the next financial year, the coming year, what will be the aggregate total fiscal performance of the government. So entire fiscal policy, how the government will handle their fiscal policy. So you can, by looking at the budget, we can come to so many conclusions about the fiscal policy, their fiscal decisions, on what aspects have they given priority, what aspects they have neglected, right? And so many decisions, judgments can be made. So government budget is a document or like a statement which is analyzed by a lot of people because it kind of gives an idea the direction government takes for the current financial year as well as for the future, right? Just like how you analyze financial statements of a company and make decisions, right? You kind of realize by looking at the income statement, balance sheet, you realize what are the like plans of this company, what are they focusing on, how are they planning their investments, what are their growth potential. So many decisions we make, right? Calculating ratios and things like that. And a lot of investors take that information for their decision making. So similarly, government budget is something which many people analyze and make decisions in the private sector as well as the foreign sector if they are trying to make investments in our country. So overall budget balance can be derived by using these two formulas. Taking the total government income, without the total government expenditure. That way you can identify the overall budget balance. Or else you can use the account approach, current account balance minus the capital expenditure. That way also you can calculate, right? So the මේ වගේ පොඩි information දුන්නොත් you should be able to calculate the budget balance. Okay? You need to remember these formulas. Any question on that? Any questions? Now we are going to talk about the types of budgets. Okay, before doing this, do you want to take a small break? Break is like 5 minutes. Okay, just to break the momentum. නිදාගෙන please නැගිටලා මූණ හොදලා හරියන්න. Quickly, just 5 minutes. Huh? Don't take long. Now 4:25, we back by 4:30. And so my concern is so trying to just promote this. Okay, is everyone back? I sent the attendance sheet, signed only for one session, no? There's only one session. Okay, is everyone back? Yes, so earlier we discussed about overall budget balance, right? So now deriving from that, we will identify three types of budgets, right? First one, balanced budget, surplus budget, and a deficit budget, right? So balanced budget means the total government income, it can be tax and non-tax based, will be equal to total government expenditure. For example, if your total government income is $5,000 million or whatever, Your total government expenditure is also equal to that. So you have a balanced budget. So there's no surplus or there's no deficit, right? So in other words, that is a situation where the government of the country restrict their expenses to the income they generate. They don't spend anything more than the income they generate. So if they generate only 5,000 income, they will make sure the expenses are also 5,000. Even though the country has other needs, they don't spend for that. They restrict their budget. We call it a restrictive budget. Then the other type of budget is a surplus budget. That is where the government income is higher than the government expenditure, right? It generates a surplus. So if the income is 5,000, expenditure is 3,000, so you have a positive balance in the budget, which is a surplus budget, right? So surplus budget can only be presented in an economy in which the government expenditure sources increase at a lower rate than the expansion in the government revenue generation. So that can be possible only if in a country where the income generation increase at a higher rate than the expenses, increment in the expenses. So if the country has spent more on capital investments earlier, if their income generation is higher, for example, let's take a country like Japan, where the income generation is higher than their increment in the expenses. That is a situation where you can generate a budget surplus, right? Then deficit budget is where your expenditure is higher than your income, right? So if you earn only 5,000, you have 8,000 worth of expenses, which results in a negative balance, deficit balance. Okay. So when you have a deficit budget balance, that can create certain favorable as well as unfavorable consequences to an economy, right? So let's take a look at what are these favorable and unfavorable consequences of a budget deficit. Favorable consequences. Now let's assume you're incurring more government expenses than your income with the intention of spending that money on public welfare, like social welfare, in order to reduce the poverty in the country. If you want to ensure to reduce the poverty or to improve the living standards of the people in the country, if you are spending most of your expenses for that purpose, that creates a positive economic consequence to the country, even though you have a budget deficit. Right? For example, let's say spending on education, health, or to help people get out of the poverty situation. With that intention, if you're spending more money, then that is okay. Now, I don't know, Sri Lanka might have started spending so much on, poor people with that intention initially, but poor remained poor and got further poor with that situation. I don't know if it's government's fault or the people's fault, right? So, for example, if you take things like Samurti, it's given for people, the poor people, requesting them to start some business, like like a small home-based individual business, right? So most of the people who take Samurti, have they ever started a business? No, they just take Samurti and use it for their consumption purposes. They haven't started a business from there. They are not supporting a business through that money received. So that it's not being put to proper utilization, right? But it was the Samurti now. Some people don't even know that Samurti was given for that purpose. It's not just given for people for consumption. It's given for them. They're supposed to do a business and show that. but they are not doing that. So that is the thing. And the other thing, if taxes on goods and now having a budget deficit means your government income is lesser, you have more expenses. The first point talks about if your expenses are mostly on facilitating more social, like in more facilitating more public welfare, then that creates a positive consequence on the economy. Now, second point talks about now less government income means you are not charging much taxes from the community, from the people, right? So less taxes on goods and services, less taxes charged from the businesses, right? In a way, that is good also because you're not charging more taxes from the people, mean people have more money to spend on their consumption activities, right? So if they spend their consumption money on their consumption activities, or like if they are on their investments or whatever, that will uplift the living standard of the people on one hand. And if you don't charge too many taxes from the businesses will have more savings, which they can invest on the business and improve the productivity of the businesses in the longer term. So that is also good, not charging too many taxes. Okay, that will help the businesses to expand. That's another favorable consequence of a budget deficit. And if the budget deficit is due to increased spending on capital investments, which will expand production volumes and quality and increase employment in the country, then that is also favorable consequence. If your total government expenses have increased due to, let's say, a capital expenditure, that means you have made an investment on a acquisition of a real asset or some sort of a capital investment which generate returns over more than 1 year time, over the longer term, right? So if that's the case, that means ideally in future, the country's production volumes will increase and as a result, there will be an expansion in the economy. GDP will increase, gross domestic income will increase, more employment will be created, more production, more goods and services, all of that will create a positive effect. Is that clear? So those are the favorable consequences of a budget deficit. So there is some good side to it as well. Okay. Now, what are the unfavorable consequences? That's what we all talk about now. So what are the negative consequences of budget deficit? I'll give you 1 minute. Think for some point and you all have to tell. Okay? Think about at least 1 point unfavorable consequence of a budget deficit. Think to yourself. Okay. So tell me what is the yeah, that is where the deficit is created. What is the negative consequence of the deficit? After the budget deficit is created, what are the side effects, other issues which come, consequences?
Right.
Right? Yeah, one thing we have to obtain loans to cover, right? To the budget deficit, and there are negative consequences of that.
Yeah, when you access all this. Tax right to is the government. Living standard.
Okay, that should be taken, but now already the government has decided on their taxes, they have decided on their expenses and already have divided the deficit. So after the deficit, what are the consequences?
First would be. Or.
Okay, wow, how can that happen?
The living standard of such individual.
Okay, how can you link, how deficit links to that?
The government has to go beyond law, then you have to pay that, get the loan in the government law. Then the spending amount of, the well-being of the society will be reduced automatically.
Okay, okay. Yeah, inflation can be created due to budget deficit. What that? Declining foreign investment. Why and how? Yeah, included in salary of income. So you have to always link how budget to be that and this lead to that. Later, okay, the government has printed money, which leads to inflation. So these are things which we face currently, so I'm sure you can tell something. Okay, why? How it was happened? Yeah. Is that the reason? How does the interest rate increase during the budget deficit? Yeah, to cover the deficit. You have to explain now in the exam, if I tell you, write the, what explain the unfavorable consequences of a budget deficit, you have to clearly mention from the budget deficit how that happened. Just saying interest rates increase will not give you marks. If you explain how the budget deficit leads to an increase in interest rates. Right, that part you have to show. So you have to explain how. Can someone else tell how it increases interest rates? Inflation
the money from society. And pay a high rate of interest.
sorry.
Some collect the money from individuals or funds for the bank. Bank pay the high interest rate go to fund.
Okay, now like that. Anything else?
Exchange rate is not.
Okay, how?
Because government is paying more imports. And the export income is generating mutual countries basically. We are importing from countries. So exporting is increasing, so that is why it is. And the current expenditure, imports are coming.
When there's a budget deficit, how do you see import filling? Yeah, imports are there under government current expenditure, but now they have divided the deficit now. How the deficit leads to exchange rate depreciation. Can you find the link? Can someone else explain that?
Yes. We have to borrow loans. When we are paying loans back, we have to use our foreign reserves. Then we can't spend on our imports. Then for that.
Yeah, basically you can stop there. So you have to borrow foreign loans. As a result, you have to repay the foreign loans plus the interest for which you use more currency, the reserves. So when you spend your reserves, the exchange rate will come. Likewise. Any other consequence? Okay, so let's take a look at one by one. An increase in the budget deficit shall increase the overall government expenditure, thereby leading to an inflationary pressure within the economy. So inflation will increase. Why and how? You have a budget deficit, right? So when the government has a budget deficit, they have to finance that deficit, right? They have to somehow incur those expenses. So sometimes the government might increase in printing money or expanding money supply. So when you expand the money supply, what will happen? Inflation will be created, right? So inflation is a negative consequence deriving out of budget deficit. That's what has happened to Sri Lanka. Continuous budget deficit for so many years. To finance the budget deficit, they have keep on increasing the money supply, and that has led to high levels of inflation now. Clear? So that is one. So if there's anything, you can write down now, any point. The other one, increasing interest. How did interest rates increase? When there's a budget deficit, you have to finance the budget deficit. The government has to finance that budget deficit. So the first way in which they try to finance that budget deficit could be through money supply, increasing money supply, or they can borrow domestically. From domestic sources, they borrow, right? Through banks or through treasury bills, bonds, they borrow, keep on borrowing money to fund that deficit. So when you excessively borrow, when the demand for loans increases, okay, so simple demand and supply equation, demand, supply. So if the demand for loans increases, what will happen to interest rates? Interest rates will increase, right? Domestically, there's more demand for loans coming from the government. So when the demand for loans increases, price of loan is interest rate, which increases. So domestically, local context, interest rates increases. That's another negative consequence of the budget deficit. Is that clear? Private sector investment or capital formulation activities will be limited due to excessive borrowing of the government from the domestic financial market, which creates a crowding out effect. So now government heavily try to, finance the budget deficit. So from all the sources, they borrow. They borrow from the banks, other financial institutions, everywhere. And government borrow karala. So they don't have money to give as loans to the private sector, right? Because everybody deals with a limited amount of excess funds, right? So when the banks give all their money to the government, they don't have money to give to private institutes, private firms. So business organizations don't have money to to lend. They don't have access to loans. So as a result, they can't make any investments. So business organizations will not develop from year on year. Usually business organizations later borrow loans and they invest those money on their expansion activities. So if they plan for a factory expansion or production expansion or whatever, they can't do because they don't have money. There's a crowding out effect created by the government. So as a result, overall economy will not expand. The gross domestic production will not expand in the country because too much is borrowed by the government. They don't have money to borrow. Is that clear? That's another negative consequence of budget deficit. Next one, high level of foreign borrowings lead to greater foreign debt servicing expenditure, reduce the future credit worthiness of the economy, right? So when you don't have money domestically, the government will step out of the country and start borrowing money from the foreign sector. So when you have too many foreign loans obtained, that means you have too much of foreign debt servicing payments, right? That's what has happened to Sri Lanka, right? And as a result, your credit worthiness go down. That's why it all started for Sri Lanka, right? We had too many loans, foreign loans obtained, and so many loan repayments and interest repayments were falling last year during certain times. And the government decided they don't have money to pay those foreign loans. They said that they're not going to pay. When they are not going to pay, our credit rating, which kept credit rating, right? So that came down. So when the rating, that credit rating agencies, they rate countries in the world. So when the rating comes down, that actually reduce our credit worthiness. That means there's no future loans coming to our country. There won't be any future investments coming to our country as well because our credit worthiness has dropped down. Our credit rating has dropped. So all of these things has happened to Sri, right? දැන් වෙන්න දෙයක් නෑ ඇත්තටම. මම වෙලා තියෙන්නේ. Macroeconomic instability caused by large budget deficit can adversely affect the economic growth process, right? And because of all these issues, inflation, interest rate, no access to foreign funds, no access to domestic funds, all of these issues have created a macroeconomic instability in the country. Okay? Caused by the large budget deficit. So budget deficit was a starting point, right? So the entire problem was where you think was in the fiscal policy. The main problem in Sri Lanka was in the fiscal policy, not in the monetary policy, right? So because of the fiscal policy issues, only we have come this far, right? Not a problem with monetary policy, not a problem with the central bank, right? So, but now who has corrected the problem? Here, the problem was created by fiscal policy, but which adjustments have already taken place? Only monetary policy adjustments. Still, no adjustment has been taken by the fiscal policy. To solve the fiscal policy adjustment should come in. Still, not a single fiscal policy adjustment being implemented in Sri Lanka. Monetary policy, the central bank is trying to adjust themselves to help the fiscal policy. But the amount, the extent to which they can do it is being touched. They have gone to the maximum extent and have done everything possible from their end. But fiscal policy, no adjustments still. So we are still in the problem, right? The current, you feel okay, we have inflation is stabilized a little. Now you have the fuel and whatever, the essential items, ඒ ටික හරියම වෙලා තියෙන monetary policy adjustments ටික නිසා. තාම ආර්ථික වෙච්ච නිසා fiscal policy adjustments එකක්වත් වෙලා නැති නිසා මේ cost එක not solved. Again, this will last someday, right? So macroeconomic instability caused by large budget deficit, it has negatively affected the economic growth process. So there's no economic growth happening at the moment, rather it's going the other way. A high budget deficit may lead to depreciation in external value of domestic currency unit. Somebody talked about depreciation of currency. So that is due to the large budget deficit, right? So when you have a large budget deficit, it depreciates the external value of the domestic currency unit due to foreign borrowings. So you borrow largely and you pay them, you utilize your reserves. So your dollar composition of the country goes down. As a result, it has an impact on the exchange rate. Decrease in the real exchange rate due to high level of domestic inflation can adversely affect the international competitiveness of the economy or country. There's another way depreciation of the exchange rate happen. The inflationary effect. Inflation and exchange rate has a relationship. Okay? When a country's inflation, so I don't want to discuss it in detail, but sometimes the exchange rate is decided based on basket of goods. You might have learned about it, right? You compare the basket of goods of two countries, country A and country B. So you put the same goods, same products to two baskets and identify the total value of this basket of goods, let's say in terms of rupees and in terms of US dollar, right? And accordingly, you decide the exchange rate. So if Sri Lanka's basket of goods, let's say you have eggs here or milk and whatever, right? And the same components in US, that value versus this value you compare. So if your basket of goods value in local terms have gone up, whereas US, the eggs and milk and whatever the basket of goods value remain constant, right? So then your exchange rate in terms of rupees goes up. Do you agree? So inflation, I explain it in the very simplest form, right? But there's a formula to calculate that. Inflation rate has an impact on the exchange rate. So when there's high inflation in a particular country, that country's exchange rate depreciate against the country which has a lower inflation rate. Okay, so that also has an impact on that is created due to again this deficit. A large budget deficit and expansion in government expenditure tend to adversely affect the economy's BOP performance, balance of payment performance, right? So when there's a large budget deficit and there's so much of government expenditure, the balance of payment get affected. Balance of payment is calculated by what is your total export income minus the import expenditure, right? So that balance of payment also get affected. There are also an exchange rate pressure coming in. So here also this one, all three affects to the exchange rate. That's what we are experiencing now. All starting point would cause this budget deficit. Okay. A large budget deficit represents inefficient fiscal policy management and a lack of fiscal discipline. Right? So why you have a fiscal policy deficit? Mainly due to poor fiscal policy management and lack of fiscal discipline, lack of discipline of the government, right? So there are countries, developed countries, who has a budget deficit. Sometimes US has a budget deficit. UK and some of the other European countries, most of the time has a budget deficit. But have they faced this issue? No, because they take measures to control this budget deficit. They ensure the fiscal discipline. Even though they have a deficit, they manage it well. Now, Sri Lanka, back then also we had a deficit. That deficit has kept on expanding, not reducing. Now, other countries also, it's okay to have a deficit as long as you manage it effectively from year to year. Either you reduce it or you keep it stable. But what has happened in Sri Lanka, it has got expanded largely over the years to a level that we cannot control it anymore. Right? So that is the issue. Is that clear? Any questions on that? Any questions? Okay. If not, let's move on. If you want to make any notes, you can take down. So as I earlier said, if I ask a question, what are the economic consequences of budget deficit, you have to explain how it is being created step by step, like logically. Okay? You can't just say interest rates increase. How and why interest rates increase should be explained. Now we are going to move to this section called multipliers. Have you learned about the multiplier effect earlier? Anywhere multiplier effect have you discussed and learned? It can be government spending multiplier, tax multiplier, or investment multiplier, any type of multiplier. Now, to get a detailed understanding of this section, you have to read, if you want, you can write down in your the textbook, the reference book which I have uploaded to LMS, read from page 482 to 484. That clearly explains how, what is this government spending multiplier and how to calculate it and everything. Page 482 to 484. Okay, now since we were discussing about government's role or government's fiscal policy, so we talked about the government role earlier, government role, functions, and things like that. Then we discussed about the government fiscal policy, how they manage their fiscal policy, government revenue, government expense. Now we are going to talk about now, earlier, I hope you remember, I think the last lesson we discussed, in an economy, right? If you take the aggregate expenditure means the total expenditure which is incurred in an economy is equal to the consumption expenditure incurred by consumers plus the investment expenditure which is incurred by the business organization firms, plus the government expenditure incurred by the government. Did we discuss about that last week? We did it, right? Yeah. So the aggregate expenditure of an economy is a total of the consumption expenditure incurred by individuals, investment expenditure incurred by business firms, business organizations, government expenditure incurred by the government in a closed economic situation, right? So, this actually shows an economy's equilibrium. Do you agree? We say when these are equal to this, that means the economy is in an equilibrium position, right? So if you look at this overall point of view, if the government wants to make an impact on the economy, what are the ways in which the government can make an impact on the economy? Looking at this formula, the government wants to create an impact on the equilibrium in the economy. What is the possible source through which can they make that influence? So economy is equilibrium in this situation. So the entire macroeconomics economy's equilibrium is simply demonstrated through this equation. So if the government wants to make an impact on this equilibrium situation of the economy, what can they create an effect on? Yes. So the only place or the main place which they can make an impact is where government expenditure. Consumption expenditure is decided by individuals. Investment decided by firms. The only place which they can create an influence in this equation is government spending or government expenditure. So if they want to make any sort of an impact on the macroeconomy's equilibrium, this is where they can touch first. Right? Agree? Now, let's say, for an example, the president of the country decides that the country's unemployment level is very high, right? So you need to lower unemployment level and you want to increase the output, product generation in the country and income generation in the country. You want to reduce the unemployment, right? So the president says that in the country, we have to reduce the level of unemployment, expand product generation, output generation, and expand income generation, right? So the only place where they can make an impact is government expenditure. But also there's something hidden here, an impact which the government can create, which is not shown here, right? Which is called taxes, right? The government, on one hand, they can have an impact on taxation. The other hand, they have impact on their government spending. So taxes, is it shown here? No, right? It's not shown here, but does it affect each of these activities? Yes, taxes affect your consumption activities. Taxes affect the company's investment activities, but it's not shown here directly. I hope you remember because taxes was a leakage out of the system. එතකොට අර main equation එක පෙන්නන්නේ නැහැ. ඒක leakage එකක් විදිහට තමයි පෙන්නන්නේ. So that is why it's not shown here. The government, there are two ways they can make an impact on the economy. One through their government expenditure. The other one through the taxes. Do you agree? And we talked about government expenditure in detail earlier. What are the types of government expenses? Today we discussed current expenses, capital expenses. Yeah. So that is included in that current and capital expenses. So that is there. The other one is the income generation, which is about tax revenue. So these are the two ways in which the government can create an impact on the economy. Agree? So now okay, you can write down an example. I think it would be easier. So just write an illustration. Illustration. President of the country says, within inverted commas, we need to lower unemployment of the country by increasing output generation and income generation. However, taxes should not change and should remain at the present level. Close inverted commas. Currently, the economy is an equilibrium. The economy is at equilibrium where you can take this formula currently, the economy is at equilibrium where aggregate expenditure equals C plus I plus 3 and the values are this 900 equals 700 plus 700 plus 100. Okay, next line. The acceptable level of unemployment can be achieved only if the aggregate output or aggregate expenditure, output or expenditure, increase to 1,100. The question is, how much of an increase in government spending should be done in order to increase aggregate expenditure to 1,100. Okay, read that question and see whether you understand and see whether you can come up with some answer for that. Read that question and see whether you can come up with an answer to that. No. What is the answer? Can you just guess? Something is fine. How much should now the president says that we have to reduce unemployment. So how to reduce unemployment? Create more output, or rather increase more production so that firms will expand, more job opportunities will be created, and you can reduce unemployment. So in order to do that, you have to increase the national level of output, right? So currently, aggregate expenditure, aggregate output remains at 900. And they assume that unemployment cannot be eliminated, but it can be reduced to an acceptable level if your aggregate expenditure become 1,100, right? So if you want to move this from here to here, what is the impact? What is the remedy the government can do? Sorry?
Investment expenditure,
Government can't touch investment.
common expenses.
Yeah, the only thing they can touch is government expenses. Now, here in this illustration, the president says you can't change taxes also. So that is not an option, right? President says don't touch taxes, don't increase taxes, remain it at same level. So the only place where you can create an impact is government expenditure. That is where you can create an impact. So what can you do if you want to increase 900 to 1,100 from this side? What can you do? Increase government expenditure by 200. So then what will it become? 300, right? So other things will remain same, right? So that's what we assume. So looking at the formula, it looks correct. And that is our assumption. But it doesn't happen like that, right? When the government increases spending from 200, they increase their spending. Okay, so government spent so much extra 200, let's say dollar million or rupee million on the economy. The government spent 200 extra on the economy to buy goods and services. What will that create? That will create an increase in the aggregate expenditure, aggregate output. So the output in the country expands. The goods and services which are produced in the country expands. Okay, then what will happen? Sorry? Yeah, so aggregate output in an economy increases means what will happen? More products, more goods and services available in the economy. Then what will happen? Sorry? One thing, aggregate supply increases, right? That means firms produce more goods and services, right? So firms now they're encouraged, there's more demand coming from the government. So they spend more goods, they produce more goods and services. As a result, what will happen? Their investments also rise. So when the government expenditure rise by 200, the firm's investments also rise because they focus more on production of more goods and services. So there are so many goods and services available in the economy. Now, what will consumers do? There's no change in taxes. So they have more products available in the market. So they start demanding more products as well. So demand increases. As a result, consumption expenditure also increases. Right? So even though this injection or rather 200 extra income is spent by government on the economy, 200 කට වඩා වැඩියෙන් economic expanding. And there's a multiplier effect. So not just by 200, but investments also increase, consumption expenditure also increase. So there's a multiplier effect which is happening on the economy. Right? So that is not only increasing the aggregate expenditure to 1,100, but it even goes beyond. sometimes might be 1,700 or 800, it reached to a very high level. Is that clear? So that is what is meant by government spending multiplier. The ratio of change in the equilibrium level of output to a change in government spending. So when you change the government spending by 1 unit, there's a multiplying kinds of effect coming to the economy. Is that clear? So to identify how much of multiplication can it create, you use this formula called government spending multiplier. Okay? That is calculated by 1 divided by NPS. Now, what is NPS? NPS is marginal propensity to save. What does that mean? Now, these are coming from previous lessons. You all have, I'm assuming you all have studied them for your A-levels and other subjects. Marginal propensity to save means how much a consumer is willing to save out of their income, right? Marginal propensity to consume means how much, if you earn an income of 100, how much do you spend on consumption, how much you spend on savings are called, one is marginal propensity to consume, the other one is marginal propensity to save, right? So how do you calculate NPS? 1 minus NPC, 1 minus marginal propensity to consume, right? So here, assume in this question, marginal propensity to consume is 0.75. You can identify NPS, right? And can you do the calculation? Quickly calculate and see how much will be the government spending multiplier accordingly. Calculate the government spending multiplier. How much is the government spending multiplier? 4. Did you get that? Government spending multiplier, how do you calculate? 1 divided by NPS, right? That means 1 divided by NPS, how do you calculate? 1 minus NPC. So NPC value is given here. That is how much? 0.75. So 1 divided by 1 minus 0.75, the final value is 4. So the government spending multiplier is how much? 4. So what does that mean? And 1 unit of increase in government spending in an economy creates a 4 times multiplier effect on the aggregate expenditure of the country. So if the government spend 1 unit extra, 1 rupee extra, that creates 4 rupee expansion in the aggregate expenditure of the economy. Is that clear? Okay, so if the multiplier is 4, right? The multiplier is 4. And if you want to increase your aggregate expenditure by 1,100, that means if you want to increase your aggregate expenditure by 200, okay, how much should the government expenditure should increase by? 200. That is the increment you want. And you know the government expenditure creates a 4 times of multiplier effect. So you divide 200 by 4 and it derives you 50. So the only increment you have to do in government expenditure is only by 50, not by 200. Is that clear? Just increase the government expenditure by 50. That will create a multiply effect and will increase the government expenditure by 200 in total. Is that clear? Due to this multiply effect. Are you clear? Okay. Do you have any questions in that? The other one is tax multiplier. Okay. So there also write down the illustration quickly. Same example continues, right? In this situation, President advises not to increase government spending not to increase government spending, but to adjust taxes to increase national output. Okay. So now here, the next situation, what happened is President says don't touch government spending, but adjust taxes so that national output can be increased, right? So same economy, right? Now you don't touch government, right? But you adjust taxes. Now, where is the tax shown in this equation? Is it shown here? No, it's not shown here because it's a leakage, right? So, if you want to increase your aggregate output or aggregate expenditure in an economy, what should government do for taxes? Sorry? Reduce. Should they increase or decrease? Decrease. If you increase taxes, that will contract the economy. That will not expand the economy, right? So what you have to do is you have to reduce taxes, right? When the tax is reduced, what will happen? Consumption will increase, right? And also what else will increase? Investment also increase, right? So when taxes are reduced, consumption increases, investment increases. As a result, aggregate expenditure will increase. Is that clear? Okay. So that is how the taxation impact comes in. But it's an indirect impact. Now, government spending, direct impact on the aggregate output. But taxes come as an indirect impact, right? So therefore, its multiply effect is smaller than the government spending multiply effect. Okay. Now, let's assume if taxes reduces by $1, okay, when taxes reduces by $1, how much will the consumption expenditure will increase? Now, in the previous example, consumption expenditure increases by $1? No, because we know out of the income we generate, we spend on consumption, then we spend on savings, and then we spend on taxes. right? So if your taxes reduces by $1, okay, if the taxes reduces by $1, where it has an impact is on your consumption. So, but not all your income you consume. Do you agree? You only consume your marginal propensity to consume that portion, right? So let's say you have extra income coming of $1. Will you spend this whole dollar on consumption? No, you spend only your marginal propensity to consume. So this $1, your marginal propensity to consume is 0.75. So out of that $1, you only spend 0.75 on consumption. Do you agree? Because that's your consumption. So extra saving of $1 means you're not spending the whole thing on consumption. You're spending only your marginal propensity to consume amount. The balance amount you save. 0.25 you save. 0.75 you spend on consumption. So taxes reduced by $1, that extra $1 saving, only you spend 0.75 on it on consumption. So the ultimate amount you spend on consumption is $0.75. Is that clear? Okay. So that is the tax effect. Okay. So we derive the tax multiplier accordingly. Okay. So take a look at this formula creation. Read it yourself and see whether you understand. So this is coming from the previous equation. Shaping initial increase in accelerated expenditure is multiplied by 1 divided by MPS. That's the earlier equation, right? So from that you derive at this. So change in Y is equal to change in tax into MPC, what we discussed here. Then that into 1 divided by MPS coming from the previous equation. So when you solve that, right, MPC dot here and change in tax dividing is into this. So that will leave you with this equation, tax multiplier, right? So whatever the change in tax, how do you identify the multiplier effect of it? MPC divided by MPS. And it's always a negative figure. Okay, because there's a negative relationship between tax and spending. Tax reduce, spending increase. Tax increases, spending reduce. So that's why the figure is a negative value. Is that clear? So, using the previous information, right, and assume that the tax cut which is happening is tax cut is 100. Okay, the change in tax is 100. Okay, can you quickly calculate the tax multiplier? Use this formula. Use the MPS and MPC figures from the previous example and identify the tax multiplier when the tax cut is 100. First, calculate tax multiplier value using this formula.
Yeah.
So what is the tax multiplier? Sorry? Tax multiplier, how do you calculate? Minus MPC divided by MPS. How much is that? MPC is 0.75. MPS is 0.25. What's the value here? 3. Okay. Minus 3. Now, if tax multiplier is 3, right? If you cut taxes by 100, if taxes changed by 100, right? What is the impact it is coming on aggregate expenditure or total income of the economy? How do you calculate that? You can use this formula. Change in tax into that multiplier. So how much is that? Change in tax is 100 into minus 3, which will be 300. Is that clear? So when the tax reduces by 100, right? Tax reduces by 100, your income, national income or aggregate expenditure or aggregate production, all are same. We learned it last week. That increases by 300. Is that clear? Okay. So that is how you identify the multiply effect of tax cuts. So can you see tax multiplier is lower than the government spending multiplier? That was earlier 4. Using the same information. Tax multiplier is 3. So that is because tax cut affecting the aggregate expenditure on national income indirectly through consumption, through investments likewise. But government spending has a direct impact on the aggregate income of the economy. Is that clear? So if there's anybody who didn't understand this latter part, please read through those pages which I mentioned earlier. So government spending was the first part. After that, I can't remember the pages. එතන ඉඳන් එහාට තියෙන tax multiplier එක. From page 484 onwards, tax multipliers there in the textbook. Please read through that. තේරුණා ඒක කියවන්න. තේරුම් නැතිවත් කොහොමද කියවන්න? තේරිච්ච අයත් ඒක කියවන්න. So that you understand it clearly, because these are potential areas for questioning for exam. Yeah, I like that. And we have discussed about the assignment. I'm sorry I'm taking too much time today. Now I will use that for our grading first one too. So your midterm test, yeah, will be next week, right? What we thought was to have it during your lecture hours, because what do you say now? It's difficult to find another time. Do you have another time to give? It's probably possible. So we'll have it during the lecture time, right? And earlier we thought of having LMS-based examination, but now you all don't have to come to the lab here, right? That's why they don't have it. So in that case, you have to bring your laptops. You have to log into LMS here through laptop. So I feel it will be inconvenient, right? If there are issues in your computer and connection dropped or something, it will affect your exam, right? In STAR, we'll do a paper-based examination, right? For the physical students, right? And you all will be doing it in the class, so in the webinar. And then now it will be done, I have to discuss with the online students through LMS for them, right? And there will be 20 MCQ questions, but you will be given only 30 minutes, right? You have to manage it. But I'm going to make it open. But open book doesn't mean you have enough time to open your books like you know something. So you have to go through, understand, learn, study and come. But if you get stuck or something, you can look at definitions වගේ ඒවා බලන්න පුළුවන්. හැබැයි concepts ඔබට දාගෙන එන්න ඕනේ. Otherwise you can't manage that 30 minutes. 20 questions. Right? So you have to go through the concepts, theory, everything, study and come. So why I made it open book for you all is because of foreign students, they are joining from their location. So ඊට පස්සේ ඔයගොල්ලෝ complain කරත් එහෙම ඒගොල්ලෝ ගෙදර ඉඳලා හොඳට exam දෙනවා අපිට තමයි never. To avoid that complaining, I made it open book for both of you. But the tricky part is you have to do it within 30 minutes. So you won't get much time to, search it out. So study and come. You can have your books with you, but I don't know if it will be that helpful. Okay? So study thoroughly and come. For the I don't know. But it will be out of your syllabus, so for you to question that. But it will be open book. But individual, you all can't discuss, so individually you have to write an exam. Is that clear? The same time, we'll ask them to log in. They will under then 30 minutes, 20 questions, open book, do it alone. Clear? Okay.
The topics are up to date.
No, I told you last week, no, but I covered up until last week. Okay? This week content will not be tested. Yes, I will not do one. Last week content you have to start. Now I told you already to start studying. So if you all have done it. We are doing the task. Any more questions? So 3:30 sharp you have to come here. It was but 3:30 everybody should be here. Right? Phone one. The phones you can't use. Right? If you want, notes should be printed. No usage of phones. No technological devices. Print කරලා ගේන්න ඔයගොල්ලන්ගේ notes එකයි phone එකක් print කරලා ගේන්න. Open book, not open phone. Okay? Here, can you give that message to others as well? Calculator. Standard calculator, no phone calculator. Scientific calculator. It's a scientific calculator. Okay, clear? Okay, any questions? Etakota unhope is like to finish the exam within 30 minutes and do a lesson also on that day. So in class, because we don't have time much that time. By the way, if there are any changes to how we are going to conduct examination, I will inform you through the representative. Okay.
Hello.
Question answer. No negative mark. Students who are joining online, can you hear me? Students are joining online, can you hear me?
Yes.
Yes, ma'am. Yes, ma'am.
I cannot hear you. Are you talking?
Yes.
Yes, ma'am. We can hear you.
Did you hear about the exam?
Yeah. Is
Yeah.
I cannot hear you. Are you talking?
මම ටයිප් කරලා දාන්න බෑ මැසේජ් එක
I cannot hear you. Can you drop a message? Can you hear me?
Yeah, ma'am, we can hear you.
I'm sorry, I cannot hear you. Are you talking?
No, no, I said we can hear you, ma'am.
Okay, so I'm sorry, I cannot hear you for some reason. Okay, we have this. I hope you all heard what I told about the examination, midterm test, right? So it will be held next week. I told you last week also we are going to hold it next week, right? So what we thought was to have it during lecture hours because it's difficult to find another time which suit everyone, right? So the students are in physical also. I think all of you have lectures both Saturday and Sunday. And on weekdays you are working. So it's difficult, even if I take a night time, then again, because of your time differences, it will be difficult to fix the time which is possible for everyone. So assuming that y'all are joining for lectures now during the lecture hours. So assuming that that time is possible for you, so you are going to have the midterm test during that time. So from 3:30 to 5:30 during that hours, you are going to have the exam, right? And so we'll be giving a standard paper and we'll be giving 30 minutes for you all to answer the questions. There will be 20 questions which you have to answer within 30 minutes, right? And how I'm going to obtain the answers, I will let you know whether you can do it via LMS or whether you can email me. It will be an open book examination, right? So you can use your material, but we expect you all to log into the Teams and open your cameras and do the examination so that you all can be invigilated by us, right, during the time you're attending the exam. Okay. Now, are you all okay with that now? I cannot get your responses because I don't know why. Let me see. Why I cannot hear you. So that is how we have decided the examination to be held. And if you all have any issues or any concerns on that regard, now since I cannot get your feedback here from, let me see why I can't hear you. I don't know whether the sounds are not here. If you have any concerns, please email me. Please email me your concerns. My email address, I think I have given you all previously as well. It's methma.karunarathna@gmail.com, right? So please email me if you have any concerns with regards to this midterm examination. And if so, I will schedule another meeting with you guys during next week. Through Teams, I'll schedule another meeting and have a discussion with you all. Any concerns you have and how we are going to do it for you, right? So I hope this is we have actually discussed with so many people. We discussed with the coordinators and everybody at SAB. And then finally we decided to have it like this because that was the only feasible way we could do it, right? So we thought we'll do it like that. during next Saturday, during lecture hours, we'll take half an hour. So 3:30, please log in. So let's hope that we can at least start by 4 p.m. The examination after settling down everything. So 4 to 4:30, we will have the exam. And then you have to open your cameras. You can refer books, but you have to open so that we can recognize your authenticity, and also we can invigilate how you are doing the examination, and then correct your answers, right? And after the exam is over, we will continue the lecture as usual until 5:30, right? So that is the plan. And if you have any concerns with that plan, please email me. Then I will discuss with the coordinators and everybody, and we'll arrange a meeting with you guys, and we'll look at a feasible solution. Okay, I hope you are clear with what I said. I'm sorry, I cannot hear what you say. I think there's some mic issue probably here. Sound system is not working. Sorry, sound issue, right? Sound system, I cannot hear. So if I'll have another meeting in that case with y'all, separate meeting, let's schedule and discuss if you have any concerns. Okay. Thank you very much for joining. Please send me an email with your concerns and if there are any issues. So we will discuss about it in the next week and decide, coming to a final decision with regard to mid-semester examination. Okay. So you will be tested up until the last week's lesson. This week's lesson will not be included in your midterm test. You will be tested up until whatever we have covered until last week. Okay. Okay, thank you very much. Please send me an email if there are any concerns. Okay. Thank you. See you next week.